Welcome to the Green Podcast. My name is Dylan Welch. I'm the CEO of green.org and Dylan Welch Media. Our goal with this podcast is to bring you the biggest names and leaders in renewable energy, clean technology, and sustainability so that you can stay up to date with the latest trends and everything that is happening in this world. Not only that, you'll get some action items for your life so that you can apply some amazing things and make your world a better place as well. Let's get the show started. Hey everyone, welcome back to another episode of the Green Podcast. Always excited to bring you interesting guests who are right on the cutting edge of sustainability and business and tech. So today, our guest, Al Sambar, is the general partner at XRC Venture, investing in some really exciting businesses, and just excited to kind of learn about what they're doing. So Al, appreciate you being here.
Nice to be here, Dylan. Thanks for having me.
Yeah, so let's kind of dive into it. Tell me a little bit about you and how you got into the venture capital space.
Okay, great. Well, as you said, I'm a venture capitalist, so I invest in early stage companies. So typically really early, all the way from pre-seed. So think about a founder or two with an idea and a whiteboard, all the way up to Series A, Series B. It's probably when we stop writing checks. So think about taking a company from no revenue to maybe 30 to 50 million of revenue. And I particularly like the commerce space, retail, and we think about the consumer and we invest around the consumer. So sustainable commerce is a personal hot button for me, and it's an area we've invested a lot in the Opportunity Fund. That particular fund I run out of XRC.
Very cool. I mean, that's a huge area that definitely needs a lot of work in it. And that's kind of our goal at green.org, is highlighting those businesses in that space that are doing something to be sustainable. It's it's a huge, broad industry, obviously, that can be extremely wasteful. So glad you're supporting those businesses that are trying to be a little bit more sustainable. We'll dive into kind of what you're working on, but I'm curious a little bit more about you. How did you get into the venture capital space?
I stumbled into it. Well, I mean, if I go back at the start of my professional career, I'm in my 50s now, so I'm sort of at the other end of it. But I started life after college. I was a Navy pilot for about 7.5 years, got out and came to industry working in, I joined a consulting firm and spent 25 years there, originally starting in areas around operations, doing supply chain work. Internet happened right at the beginning of my career, and then I spent 25 years doing digital strategy work as well. Ultimately was leading the firm I started in. I stayed at the same firm, Kurt Salmon Associates, the whole time, which you probably wouldn't recognize the name unless you were in the apparel consumer retail space. All my clients were always retailers and brands. And then right around 2007 or so, I retired from that in 2020. But I started just for fun investing in early stage companies with friends and other angels who taught me how to be a good angel investor. Yeah, so around 2007, I started investing with friends as an angel and learning from others. And over time, I was just really good at it. I had success, which then provides capital to invest more. And so I spent, even as I had my consulting career, I was always an active early stage investor, ultimately running my own angel groups and things like that. And then a friend of mine wanted to found XRC Ventures, which was at the time an accelerator out of New York City. And I helped him get it started. A fellow named Pano Anthos, who's the founder of XRC and the other general partner there. And so was active in getting it, supporting it, getting it started, connecting it to the industry, using my own venture funds to help support the earlier cohorts. And then when I retired from consulting, we ultimately sold our business to Accenture. I worked there for a while. And then when I fully retired from consulting, I just came over to be full-time, focused on growing this other fund at XRC Ventures, which is sort of Series A and beyond, seed and Series A. These companies that already have revenue and are growing. Mm-hmm. That's where I focus now. All on the technology side. I spend all my time focused on technology enabled businesses.
Nice. So I want to get to the companies you're investing in, but you did mention something interesting. You mentioned how right kind of at the beginning of your career, the internet happened. What sort of changes did you see from like pre-internet to now? Do you think, I mean, obviously there's been amazing things that have happened with it, but in terms of sort of like the consumer side, do you think it's a good thing or do you think it's a bad thing? Because now we're obviously globally connected. There's more opportunities for business, but at the same time, now, instead of buying a shirt that you wear for 30 years and you take care of it, one click of a button and you've got that fast fashion. So what's sort of your opinion on how the internet changed the consumer side of things?
Well, so our core belief as an investment thesis, we write, as VC guys, I don't know how much your audience invests in VC, but for those of us that run a fund, the way they work is you've got general partners that are using their own money and invest in what they believe in, and then limited partners that give money to invest alongside as part of that fund. So you owe it to them to explain why you're investing and what you believe, so the core principles. So our core principles are that we think technology is changing so fundamentally and so quickly that it's changing how human beings, like Maslow's hierarchy of needs, right? How are human beings living their life? And that historic organizations and businesses can't adapt at the speed at which change is happening, which allows for a lot of disruption and needs a lot of invention. So when it comes to sustainability in particular, think about something like apparel, footwear. That's an industry that is inherently causes bad behavior and bad for the planet activity. The entire concept of how your historic department store is stocked with inventory forces overproduction of goods, garments, apparel, footwear overseas, 18-month lead times, huge amounts of working capital and materials flowing around the planet, just so that 1 out of every 5 of those pieces of footwear ends up in a landfill, never purchased by a customer, never worn by a human being, sitting in a landfill. And all of that was because of the way we do business. And technology doesn't need us to do that anymore. But we've got this legacy of that's how it's always been done. That's how the economics and legal structures work. We need to fix that. So those are opportunities for radical disruption. So when we look to invest, we look at companies that we think if this founder is right, it will change the way this commodity category or this product or service is actually ever produced in the future. We have this criteria that says if we're going to invest in sustainability, it has to be profitably sustainable, meaning we want the footwear company that switches to making shoes this way, or the apparel company that switches to making apparel that way, or a marketing channel that switches from overstocking inventory to digital on demand. Well, that it should then make all of its competitors unprofitable because they won't be able to compete with it. So we really like when technology can enable an entire and mandates an entire shift of how work and goods are made.
Yeah, I love that. And that's really kind of like the ethos of green.org and everything we're doing here is, there's so many opportunities to build a profitable business, but at the same time, be sustainable. And it's important right now more than ever. Tell me a little bit about the Opportunity Fund and I guess sort of why, you decided to invest in these kind of sustainable businesses when there's so many businesses, that aren't necessarily sustainable, but have the opportunity to be extremely profitable. What made you want to go down this route?
Well, personally, I have my long academic background, when you go all the way back to being younger, I was a science background and my grad work was in evolutionary biology. Before we had even mapped the genome, we were already doing but you could see, just like the internet changed everything with how we communicate as human beings, we've had the same parallel shift in biology, and just technology is speeding up everything we do. So Opportunity Fund doesn't just invest in only sustainable. It is one of the sustainable. It's one of the changes we need, and so it probably represents 25% of my portfolio. That number goes up and down a little bit, but profitable, sustainable startups are a significant portion. We will not invest in anything we believe is negative to climate change or negative to sustainability. So that's in terms of how we got into sustainability in the beginning. It largely was back to this thesis: opportunity fund invests on. It's a kind of a bet on the winners fund, meaning it doubles down on companies that we took risk on in a earlier accelerator, and then doubles down and helps them grow and get larger commerce deals and commercial deals and grow their business. And it's just an area that's been incredibly important to every brand and retailer out there, because if we could figure out how to do it profitably, that company could create a significant advantage. So we look at sort of three areas around sustainability in the consumer. One is supply chain. So how do we move goods? So we were early investors in Returnity. If you've ever rented from Rent the Runway, that sustainable package that goes to and from Rent the Runway, and you return your goods instead of corrugate. Well, that solution won the future of the bag at Walmart and Target, and you've got all these retailers now use it to move goods around the country instead of using corrugated cardboard that just ends up as waste. So Fillogic, which is cuts your carbon footprint in half to deliver last mile goods, right? It's a supply chain for middle market and being able to use channel free inventory. I don't want to get too complicated about it, but it manages and tries to limit the returns rate, reusable and resale of goods. It's a massive enabler of that entire industry of let's allow goods that have previously been worn to be delivered really efficiently and resold. We do invest in how you make. So the second category, so supply chain, how you make goods. You've got on-demand manufacturing. We've made multiple investments in those companies, and both on the apparel side with folks like Nimbly and Sealware that are on-demand manufacturing apparel. Footwear, Hylos, I think is going to fundamentally change how apparel or footwear is produced. And even in food, like Melly Bio, which makes honey without bees. So these are really environmentally important changes that have to happen if we can avoid waste. But if they happen, if I can make honey without bees, if I can make sweetener at less cost than honey made with this monocultured bee culture, we could do less damage to the planet, but we can also make money for every company that ever uses sweetener, right? Because we can do it more effectively. And then lastly is commerce. So re-commerce, companies like Recurate, Croissant Pay. We think buy now, pay later is horrible for the consumer. So buy now, sell later. We needed a consumer financing platform that could do it. So we invested in Croissant Pay, right? So we see where there's a problem, and we could see where it could put, if we could change the behavior or put money in the pocket of the consumer or allow the company that uses that to be more profitable. Amazing. So I would say that's the last part is commerce sector.
Yeah, I mean, honestly, I want to thank you because our planet truly needs people like you that invest in these, ambitious entrepreneurs that have these ideas that do need funds to build these businesses. So that's amazing. How do you, when you're looking at a business, I'm sure you get pitched a lot and, get decks and things. What do you look for, and what's that process of, looking at a company to actually handing them over that check?
Well, this thing, for those of your listeners that aren't in the VC world, there's a lot of VC is sort of segmented into early stage, middle stage, late stage. The middle and late stage guys really need profitability. They look for certain things. We're early stage, so I have a 10-year horizon. You take somebody like Hylos, who's making footwear with on-demand manufacturing. The technology, I've been involved with that since 15 or 16. I mean, Nike and Adidas and Under Armour all were making efforts around that, and they were early. It's just some of this technology takes decades to come to fruition to where it will become the standard. So early stage guys like myself can invest really early is the core. If we don't see a founder or founding team, that really we think they're the most important part. The second part is actually what we call the unfair advantage. That could be a patent, a technology, a methodology that is really groundbreaking and solves the key lever that's forcing this not to be the way it's done today. So we really need, for example, it's one thing you could make on demand produced footwear more profitably at a $400 MSRP, customer price point. So maybe that works for a high-end fashion shoe. But the trick, if you want to change the world, is to get a $30 kid shoe in Target and Walmart. Like, so, okay, what technology is going to make that happen? So we don't have to mass produce overseas in that case, right? So we go find the founder who's got the technology background and the entrepreneurship gene, and then also has the technical skills and team and access to the technology that can deliver that game changing number.
Very cool. Yeah, that's interesting, especially sort of that unfair advantage. And if you can have, I'm sure you've got connections in the space where you can kind of make those introductions to kind of get over those hurdles. And when that happens, anything can happen.
Yeah, that is our secret sauce. So my LPs, our investors, our partners, all run companies, right? These are boards or venture groups that, so they're wide open to let them try some of these things. But at the end of it, that we call them our what must be truths. So a founder in order for me to believe this founder's story that they're going to change the world, what must be true? Well, this technology must be able to produce 6,000 pairs a day at the cost of goods that's cheaper than landing something from China at Long Beach. Like, I just keep using that footwear example, but those we have to have a clear point of view. We have to understand the industry. I do that by talking to the people I know in the industry, plus my own career in that industry, having known some of these things, and then finding and testing the founders to make sure they can get there. And even if that may take 3 or 4 years of investment, we're okay with it because we're early investors, and we can help them marshal the forces needed to do it. But we do need that clarity of this is what's needed to change the fundamental way an entire category is produced, sold, and used.
Yeah. For you personally, what's your favorite part of it? Is it kind of finding that potential unicorn, or is it being more in that advisor mentor role, or sort of seeing these impossible tasks and getting over that hurdle? Like you mentioned, that unfair advantage, like on your sort of, day to day, month to month, year to year, what do you really enjoy when those wins happen?
Yeah, my founder and I come from different, my partner and I, Pano Anthos. So Pano comes from the point of view of being a successful multi-time founder. GPs in the VC world, they come from that area, or they are like me and they come from being a successful investor. I'm more of the investor side. I never look at the founder and say I could be a better founder than that guy. I completely appreciate my founders and recognize I could never be one of those. The 20-hour days, the ridiculous commitment to make it successful is a special gene that these founders have. So I think my excitement comes from supporting them, finding them, number one, and then unlocking doors for them. I never demand a board seat. I'm one of those. We're more one of those VCs that doesn't think that's maybe the best uses of hogging the board seats, particularly at the early stage. But I tend to be very active on the boards as an observer, and very active in the strategy and execution of the company early in their life. It's sort of up to say 50 million to maybe a max. I still have some of them that I'm involved with that are in the 100 millions later, and they're they're thinking of other things, but at that point, I may be the call when you need somebody's guidance, as opposed to actively involved in heckling their board, execute quarter to quarter.
Yeah, I mean, I know, with green.org, and we do a lot of interviews and podcasts and events, and I've been fortunate enough to meet some really interesting people. And I really enjoy when, you have these two totally different people, but you can make that introduction, that connection that probably never would have happened without you. And then just, the magic happened. So I'm sure with you, when you're working with all these different organizations, different people, you're able to make those introductions all the time. which is probably pretty exciting, and getting to see, you know, not only those introductions, but actually getting to see the fruits of that labor 3 years, 5 years down the line. Tell me, you know, a little bit about some of the companies that you're most excited about right now.
Yeah, sure. I feel like as soon as I do that, I'm going to leave somebody out. But I feel I've kind of talked around footwear at the moment, so I'll use that one because I've used that as an example. I'm incredibly excited about Hilos, Hilos. So this isn't a brand. The consumer won't go buy a Hilos pair of shoes, but they will buy. But will they go buy from their favorite footwear brand? Or frankly, even an apparel brand or some other kind of brand that now, because of a new way of making footwear, they'll be able to, these other brands will be able to carry footwear made sustainably. That industry, I grew up working in that space, and your average running shoe, for example, is about 14 different parts that are sewn and glued, and all of that together. So the magic here is the design lead time to do the design of that, from a pencil to a paper in the hand of a designer, to a factory figuring out how to set up a manufacturing line, to getting the shoes ultimately onto a Foot Locker shelf, is about 18 months historically. And I referenced the number, a fifth to a quarter of those shoes end up in a landfill because we have to overproduce and work down to try and sell them through. So that's just an area that just needs to be killed. It just needs to go away. And there have been multiple efforts all through the teens, 2015 timeframe. You saw a lot of efforts on-demand manufacturing because we were getting into the 3D knitting. But we're at a point now. So Hilo is one of them I'm super excited about. We're some great founders out of Israel, and on the technology side, and with lead investors out of Nike and former operators out of Nike. I think just we've really advanced how well that can do it, with partnerships with HP, BASF, like figuring out how will we just have factories all around the United States, all around the globe, that you can design. I have a pair of shoes that was designed in a 3-day sprint, meaning the designers sat there on day one and drew up the designs. They went for Milan Fashion Week this year, and they printed out the shoe. And the next morning, they all said, "Oh, I want to change this, want to change that." Reprinted the shoe, and on day 3, the final version of the shoe went out to actual customers. So you went from concept to ship to consumer in 3 days. That's insane. Like, if I can do that, and then the real trick is to do that not at a $300 a pair, $600 a pair fashion shoe, but to do that on a $30 a pair kid shoe. Like, that fundamentally changes how an entire industry works, and a huge percentage of landfill goes away. So I'm very excited about them. I think that in the make space, I'll use them as probably my most excited. On the supply chain side, we've got a startup called Logic, which, and if you're in the industry, you don't know them, but they're think about malls, office space, any space that today is underutilized. You don't necessarily have to have a warehouse filled with robots and 60-foot clear buildings that are far away from where the customers live. They went and said, "Hey, there's so much happening on resale, on returns, on using inventory that's in the existing market. If we put warehousing right in where the customer lives, if we figured out how to put services there, we can cut the carbon footprint to deliver an e-commerce order by half. We can handle re-commerce stuff that's being returned and make it resold in the same market. Your average stuff that returns takes about 45 days to get processed, identified, authenticated, check what its condition state is, make its way back to some remote 3PL warehouse, wait for an order to come, and 45 days later, after the season's already over, try and find a customer." Logic makes that happen in about 3 days. So wow. It makes it really more valuable for a brand to go ahead and support resale. Mm-hmm. You think of somebody, we got another startup called Recurate, which allows any brand to open up its own resale website or allow resale on its own website. Well, part of the problem is that supply chain didn't work. So we needed the logics of the world to make the supply chain and cost side work, helps make the cost to take return goods and reuse goods, already owned goods, sort them efficiently and allocate them to orders and find new customers right in market. That's one of the bigger problems for somebody, a brand that might want to replicate what a real leader like a Patagonia is doing with their wornwear solution. So we love that combination. And part of our investment thesis is to get startups that complement each other. So if Recurate is out there helping the brand enable a resale platform, well, one of their problems is how do I deliver against that with solutions that can make it really efficient and low cost to get the inventory that's being resold inspected, authenticated, and reshipped to a customer that's near where it's coming from instead of shipping it across the country and burning up all this carbon. So part of the issue is for us is the magic is looking for ways where these complement each other.
Amazing. Yeah, no, I love how you kind of approach it with how the different startups can actually also work together too. So first off, Al, I want to thank you for being here. Super interesting. I'm going to leave you with this final question. What would you do with $1 billion?
$1 billion would allow, so the challenge with the VC world is you have to take a concept and jump from one stage to the next stage and keep proving the next stage. I think in some of these areas, I think on-demand manufacturing right now is at a massive inflection point where the singular problem in several industries, particularly apparel and footwear, is simply scale of factories located in the major population centers. If I had $1 billion right now, I would I love this question. It's a great question. I would open a platform for on-demand manufacturing of apparel footwear and I would basically tackle North America. You could do it with 7 facilities in major metropolitan areas in Mexico, North America, and Canada, and be able to efficiently, essentially deliver all the way down to, I think, a typical average consumer price point that a consumer could buy in a Walmart or a Target. So think about like a $20 price point apparel, $40 price point on a pair of footwear, and you could do that with a modern, completely from scratch, on-demand manufacturing platform. Be very exciting. Circular, so that would have to tie in the circularity. So the consumer, in order to get that price point, has to agree commercially, to return the goods, and it could completely reuse. That's what we're doing at Hylos, for example. That circularity of supply changes fundamentally how I get my relationship with the customer. So that's what I would build. I think that is just waiting to be built.
Great. Well, all you billionaires listening, check out XRC Venture. Al, thank you so much for being here. Appreciate it.
Hey, Dylan, let me make one more ask for your listening.
Yeah.
I know you end it with what can my listeners do to help?
Yes.
I will tell you, if listeners, if just an average consumer would take their favorite 2 or 3 brands, and every time, like you go buy a pair of jeans from a Gap, what happens in the next week? You get email after email telling you to buy something else and something else. I would just absolutely love it if your listeners would go back to that brand and say, I really wish before I buy another pair from you, I could resell what I've already purchased and worn. Mm-hmm. Why can't I do that? Why aren't brands supporting that? It's because their customers aren't demanding. So I would really love call to action. Find that CEO's address, or just write to customer service at the, please get this to your name of the CEO. I want to be able to resell my used goods before I buy new stuff from you. It's a really common ask, and if we were to do that, those boards would respond.
Good to know. Well, Al, that's amazing. I appreciate using that ask for something for the better good, and I appreciate you, putting yourself out there and investing in these startups that have, huge potential to change the planet. We need people like you. I want to thank you for taking some time out of your day to be here as well. And any final last words that we can end the podcast with?
No, the last one is for you, Dylan. Thank you. I appreciate your podcast. It's great. I love listening to them every week and hearing from the different founders. And I think you do a great service.
I
Appreciate it.
appreciate it. Well, hey, to everyone who's listening, watching, supports the show, appreciate you taking some time out of your day. Hopefully you got something beneficial from this. Our goal is to bring different leaders in business, tech, finance, sustainability, put a spotlight on them, share what they're doing, also educate you, get you inspired along the way, and hopefully together make the world a little bit of a better place. So thank you, Al. Thank you to everyone who tuned in today, and we'll see you on the next episode of the Green Podcast. Thank you so much for tuning into the episode. My name is Dylan Welch. Appreciate it. As always, stay up to date with the latest information on green.org and dylanwelch.com. Dylan Welch Media is a full-service media and communications agency dedicated to promoting, marketing, and helping businesses in clean tech, renewable energy, and sustainability grow, get more clients, get more customers, get in front of their ideal clientele. If you have any more questions, feel free to reach out. If you're interested in joining the Green Summit, go to www.green-summit.org. Reserve your ticket today. There's very few spots left, so make sure you get on that ASAP. Thank you and have a great rest of your day.